bringing in Daniel Creech. Dan, what's going on, man?
Hey, man, lots going on. Lots going on this week. It's Wednesday and it feels like a Saturday already, for crying out loud.
I know. It was amazing. The news flow that we saw, walking in Monday, just the M&A especially. But I was told by so many technical analysts a week ago to sell, and this is for real, and the market's going to come down. And now these same guys are on TV saying, you need to buy as the market goes up, which is kind of funny. But I think the big topic here, even I was going over, is how we're not even close to being in a bubble if we compare this to other times, even from a valuation standpoint, trading at 25 times forward earnings compared to 44, 45 times during the peak, the dot-com peak. But there's a lot of positive things going out there, and it's not just the M&A deals, which we'll cover in a minute. Nvidia, buying ARM Holdings, Oracle, TikTok, Gilead Sciences, Mimetics. Some monster deals out there, all announced this week. But, what are you hearing out there in terms of sentiment? Because, my argument has been that we're not even close to being in a bubble. And as long as we continue to see these growth within these names, within these industries, it's going to continue.
Yeah, with regards to the bubble, I think we really have to separate the crowd from the individuals, much like what we do in our newsletters and stuff. But you can pull out top headlines about, hey, the FANG stocks make up a certain percentage of the S&P 500 and the Russell 1000. I think it's, what is it? Is it 24% of the S&P 500, give or take, is the FANGs?
FANG plus Microsoft, yeah, it's like 22 to 24%, depending on the day.
So we basically, not to ask for a pat on the back, but we basically do the same thing every day here in research and figuring stuff out and trailing the markets. So it was funny because we're talking through the office walls here, and Frank brings up the Nvidia $40 billion deal, which we'll get into in a minute. But I lead in and I said, who would have thought somebody do a $6 billion deal? Of course, $6 billion is nothing today. I say that, laughing, because we just throw money around like crazy not only in stocks, valuations, governments, whatever. But I just yelled to Frank, hey, man, who would have thought a $6 billion deal wouldn't even got any news? And Frank's like, what are you talking about?
I didn't even see that deal.
Yeah, Verizon bought TracFone for $6 billion. No big deal. Nvidia's got the headlines with $40 billion. Frank comes back and says, yeah, but the best news of the day for me is Pfizer. I'm like, what the hell did Pfizer say today? So basically, we got everything going on. But to come back to the bubble, just to play devil's advocate thing. So, Mr. Curzio, biggest semiconductor deal ever, right? 40 billion?
40 billion, at least one of the biggest. But I do know that there's no way this is going to get approved. There's no way this is going to get approved. It can't get approved. It's going to create a new monopoly in processing data center. People don't understand that. Even the semiconductor people, they're starting to complain about it now, but this is going to be accretive in year one. There's a reason why Nvidia stock, they added $17 billion of market cap after they announced this deal, where you usually see when a company announces they're going to acquire someone, their stock gets hit. You don't go up 5, 6, 7%. But if this deal goes through, Nvidia could double from here. They are going to own. They're going to be the biggest AI computing platform in the semiconductor industry. They're going to own it. They're going to be able to command their own prices. I would be surprised if this deal goes through, and it could. I didn't understand why SoftBank. Maybe people saying they're desperate out there, they're in trouble, but tech did bounce back a little bit. Because they were bullish on tech when it fell 10% a week or two ago. But they should be doing this for $50, $60 billion. They're doing it for $40 billion. So I don't know what they're getting. Maybe they're getting money on the table, under the table. Maybe they get their executives have, going to be there for 10 years, a consulting agreement, whatever it is. But selling this for $40 billion is a joke. That's why Nvidia surged. But to see this deal, and you mentioned the Verizon deal was under the radar, but you didn't even talk about what the Pfizer news was, because to me, the Pfizer news is a big deal because all of these vaccine companies, they all came together to say, hey, we're not pushing this. If we get a vaccine, we get, but it's going to be based on safety. And I do a lot of research in this sector, and Pfizer, I believe, is going to be the first to the market. They're going to be the first to the market with their vaccine. And the CEO came out and said, we're basically going to have a vaccine by the end of the year. Not that anyone under 40 should take it, but it's going to, sentiment-wise, even for older people, that's going to be a pretty big deal. And that, along with all these deals, look at TikTok. We looked at Gilead Sciences to acquire Immunomedics, and that's a $21 billion deal, and that was the third largest of the day that was announced on Monday. How crazy is that, right?
Yeah, and that was Monday, because guess what? Today has already taken place with the newest IPO. Have you been following Snowflake at all?
I know. I've been following it, how they keep raising it and raising it and raising it. So
I don't think it's trading yet, but it went from 70s and 80s It was supposed to be priced at to over 100, and now I think it's supposed to set to open at over 200.
Is that really what?
Yeah,
I didn't even see that yet. Oh man, holy, that's amazing. Over 200. That's bad for the investment bankers. That means they really messed up.
Yeah, it was priced in over 100, but I was trying to take notes and everything was just changing. But it was hilarious because so cloud, data computing, data analytics, obviously that's where everybody wants to be with work from home, everything being pulled forward. But the crazy thing there is Berkshire Hathaway and Salesforce.com are back in this. They each bought, I think, $250 million in the private placement. So, you get a headline like that, and to think Buffett and his managers buying more growth companies, that transition of allocating capital is going to be. But man, you throw those guys behind something, and I can't wait to watch that thing trade.
I'm looking at it right now. 2018, it raised $450 million, bringing the valuation to $3.5 billion in 2018. I mean, we're talking about October 2018, so less than 2 years. Less than 2 years. Now at $120 a share, which they're coming out at, but you said 200. I didn't even see that yet. That's
I think
incredible.
It's going to open.
Yeah, it's going to open there. I mean, you're looking at 120 to $33 billion valuation. If I knew it was open at 200 and I was the owner of, and I owned like 30% of this company, I'd sell like 25% right here if it's going to open at 200. I mean, it can go to 250, 275, but that's insane. I mean, it's insane. We all know the fundamental. We all looked at it. Even the investment bankers looked at it, and for them to be this wrong on pricing something this big that it could have came out at $200, holy cow. But yeah, it's interesting. We're doing this around 12 o'clock, and we do this in the middle of the day, as close as we can to being in real time. But let's see how it opens. Who knows how it's going to open over the next couple hours? But I had no idea. And then you looked at today also, right, with home builder sentiment, right? I mean, it's, man, for those of you that own a house in your neighborhoods, the value of my house, someone across the street sold their house just a week ago. And the value of my house is up probably about 20% over the past 9 months. 20%. Like, I didn't think it's amazing. We have more square footage. I think we have a nice. I've seen their house. I think ours is nicer in terms of the spacing, the outside, the backyard and stuff. We have a pool, and it went out. It's fetching 20% more. So I mean, home builder sentiment. You saw it, right, Dan? I mean, we looked at Toll Brothers, we look at Lennar, we look at them, but now the sentiment comes out. I mean, it's pretty crazy.
Yeah, and that I throw CNBC under the bus here a little bit, but everything has to be clickable, on the headline. So I understand that, but everything turns into, oh, well, is this a red flag, or, these all-time high sentiments and stuff. Well, when you look at what's driving the sentiment behind it, it shouldn't surprise anybody. We've talked about, I think you talked about in your opening on home builder sentiment, Dollar Stock Club last week, we threw a pick out there for playing the home builders. When you have basically zero interest rates and a demand for people that make a lot of money that can now live anywhere they want in the country, that's going to be a huge sentiment or path going forward. And I don't understand why. I don't look at that as a sign at the top. I look at that as a trend and more of a confirmation than anything else.
And it's a good segue into what we saw on TV, which was Chamath is one of the greatest technology investors. I mean, he's incredible. I told the story that I was at an investment conference. I don't know if it was Seeking Alpha, something. I forgot what it was. Very famous investment. It might have been an Iris Own conference. And he went up there and said Amazon's going to have a $3 billion valuation when it had less than, I want to say about a $350 million, $1 billion valuation. So he says it's going to be $3 trillion. And David Einhorn went up after him and basically made fun of him and said, yeah, I'll take that bet. You have no idea what you're talking about. And sure enough, and this was about 7-8 years ago. And we know it, I know his performance has been a little bit better lately, but yeah, just, anyway, but now he came out and he's backing a company called Open Door through a SPAC. Pretty interesting, guys, right? Because I've been talking about security tokens for how long, saying this is a better way to bypass the system where it's better for investors, it's better for issuers, where it costs a lot less. Now we're going to go free trading in a couple weeks on a global exchange. Going to be the first token in the world to go free trading on a global exchange. It's going to be available to retail investors, mom and pop investors. Very proud of that. Almost done. Very, very close. But SPACs is something similar. Chamath was going over that. I love the fact that Andrew Sorkin put his feet to the fire when he was asking him about fees, because he said, I put $100 million into it, and he's like, well, what are the fees? Well, it's tens of millions. Well, what is tens of millions? And Andrew kept pounding it, which I was surprised because they're sponsoring they're delivering Alpha Conference, and Chamath is going to be one of the biggest speakers, and he was kind of going after him, and he wouldn't let him off the hook. But the amount of fees that they're generating still, that's why security tokens, I think, just a matter of time before it goes crazy. But yeah, I want to get your opinion about that. I know you're familiar with that deal, but and SPACs in general, but that was pretty crazy. For him to get on TV and then get ripped a little bit, it was interesting.
Yeah, I think I'm going to come to the defense of a multi-billionaire who needs it.
Yeah.
The only thing bad about Chamath, and I'm probably butchering that because I'm in the middle of researching this guy a lot more, just because I know his track record and stuff. I mean, the guy's a partial owner of the Golden State Warriors NBA basketball team, but I do say he didn't answer the question. He didn't answer the question on fees, which, to come to his defense, he probably doesn't know, because there's probably incentives.
He was saying he wasn't sure.
Yeah, and I'm halfway joking with that, everybody. Of course, I don't mind the guy getting paid if he's doing something where, like, I hate the idea if they're selling it as a cheaper, better way to help everybody, and then they're backdooring all these ridiculous fees. We'll have to dig through a bunch of filings and such nature. So I'm not, I don't have any problem with anybody making money. I know Frank doesn't either, but it was interesting how he did dodge that question. The other thing to me about it, with the open door thing, it's a $1 billion deal. I don't know how many group of investors he has, but the cool thing is that Wall Street is changing. So to Frank's point about the security token industry, I think it's great to see Wall Street go away from the typical Wall Street IPO. Obviously, COVID, cuts down on traveling, but these SPAC, special purpose acquisition companies, reverse merger or direct listings, we've seen kind of pick up some steam. So I think that change from a macro level is great, and I think it's only going to lead to the security token. We need to get Chamath on the security token path, is what we need to do.
Yeah, I know, that'd be nice. I mean, I think it's just a blip on the radar for him, where he could probably take money out of his pocket and buy the whole industry.
Yeah.
But that will change, just like it changed in a lot of industries. But he is an incredible investor, and I'm a big fan of his too. I mean, he never really tears people apart, and I've seen him get tear apart so many times, and he's been right so many times. And this guy just has a knack when it comes to technology, knowing what's going to work time and time again. And you don't see him have a lot of losers. We all have losers. I could name a lot of losers for a bunch of great, smart people out there, and they have many more winners than losers. I don't see this guy having too many losers. I haven't seen it, but he's just into the right companies at the right time. Remember, SPACs are different from IPOs, where if you're looking at this IPO with when you talk about Snowflake, it's coming out if it comes out at 200, it's going to be what, 160, $170 billion plus valuation. These companies are pooling their money together with SPACs and saying, we're going to buy a company over the next 12 months. And if we don't, you get your money back. Over the next 12 months, we're pooling our money together. Basically, they'll take over a company, and it'll just be a holding company on the exchange, a New York Stock Exchange or whatever it is. And they'll find a growth company taking over. It happened to be Open Door. And then, boom, they just take over the whole entire company, incorporate everything, and it happens much, much faster. But this is a way where you can get into these companies at a much earlier stage than buying the Snowflakes where it is. So there's a reason why Goldman Sachs, all the investment banks are doing SPACs now. And pretty soon, all the investment banks, they're going to be doing security tokens because all the infrastructure is there. We're seeing T0 light years ahead of everything. But there's one more subject before I let you go, Dan, I want to talk about, because we're looking at the banking sector. Not everything is great, guys. So we're seeing this shift, right? The behavioral shift I talked about in some industries to other industries. And banking is getting smoked. Traditional banking, right? This is the Citigroups, the JP Morgans, Wells Fargos, not the Morgan Stanleys and not the Goldman Sachs, investment banks that make a fortune off of trading and liquidity and volatility. These companies are linked to interest rates, and when interest rates are really, really, really low, that hurts their net interest margin, and they're going to stay low for a long time. And now Citigroup is a company that used to be in our portfolio. We sold at a great time before all this nonsense. We sold a lot of our stocks in February before the market crashed due to COVID. I love Citigroup because they were buying back their stock and raising their dividend to the point where they were going to buy 60% of their float, meaning they didn't really have to do anything, just have earnings stay the same relative. And you're looking at a company where you would see this grow tremendously. At least the share price will go tremendously because you're just taking all those shares off the market. Now that you're no longer to do this, the Wall Street Journal also reported the company could get reprimanded for failing to improve its risk management systems. And I mean, we've seen a major sell-off in Citigroup, and the financials in general. You just refuse to participate in any kind of rally we have, right?
Yeah. What kind of move is that? You let the next CEO take over, and then the headline comes out about how you might get fined, and the government's even more pissed at you.
So she took over. she took over, and
I
then
apologize. I don't have her name.
Yeah, no, but
it was a big deal. I mean, they named a new CEO, and then bam, you get all this. Then the stock drops 10% in 2 trading sessions, give or take.
I mean, so basically, she takes the ring, and then she's forced to let people go, and then you're seeing this stock really, really get hammered. So, it's just really, really crazy. I mean, Jane Fraser's name, and you have Michael Corbett, who's been there for a while, a very, very smart man who's now doing personal things and stuff like that. But still, when I look at Citigroup and I see this thing come down so much, I mean, to me, it looks like Wells Fargo, Bank of America. I mean, what about their risk management systems? But it is interesting, guys. That's what this podcast is about today, is about this behavioral shift we're seeing. And it's going to result in some sectors doing great and other sectors doing terrible. The ones that are doing great, they're seeing tremendous, tremendous amount of growth. And for people to say that's in a bubble, like that's not going to continue, they're crazy. We only have 16% accounts for e-commerce sales when we're looking at the total retail sales, over $5 trillion in the U.S. annually. It's only 16%. And it went from 11 to 16%. And that's going to stay very, very high now, I would think. And there is these major shifts, right, Daniel? I mean, you're looking at a lot of things that we talked about here. There's going to be clear winners: the Gilead Science, Immunomedics, biotech, healthcare. But then you do have, the banking sector and even commercial real estate and some of these REITs, right, that don't look too good.
Yeah, 2 quick things on that. For us, selfishly, it's going to be great to see separation. I mean, we have newsletters, we're stock pickers. So we want to try to, do the homework and figure out, hey, this is going to help these groups of companies, such and such businesses, and we want to ride those trends. The interesting thing on the finance for the banking industry is from your major shift from your traditional banks like Citigroup you talked about to the trading banks like Goldman Sachs. This volatility, this environment should be great for them going forward. So, if you have a solid company, especially as an investment, and you believe in the management team, you want them to have the stage of opportunity. And if you're Goldman Sachs, your investment bankers, you're trading, this is your opportunity to perform. I mean, you want this. You want volatility. You want a lot of things moving. So that should be good for them. The other thing, real quick, is through stock screens and just insider buying. You can look at insider buying on FinViz. I know Frank uses that a lot as a free site for everybody out there. But there's been a lot of insider buying on regional banks. And I don't mean a lot of insider buying is in money amounts. Some of these are $50,000, $150,000 purchases. Not that that's nothing. But what I think interesting is the amount as far as the frequency. There's a lot of insider buying as far as transactions go. And what's going to be interesting to dig into that is that regional bankings in certain sectors, if you're in the Midwest, if you're on the coast, you want to look at exposure to flooding, fires, all that kind of stuff. Where their loans out? Are they agriculture? Are they oil and gas? But that'll be something. I mean, obviously banking is a huge part of the economy, and it'll transition. It's not going away. But those are a couple of things that are really going to be good on the path of going forward.
No, I love that. I love that idea too. And it's good that you saw that. I didn't see that. But I would look also when it comes to regional banks, look at the ones that have a lot of exposure to real estate, which is completely booming right now. And I bet you that's where you're going to see a lot of insider buys, because I covered regional banks before, and some of them have leverage to very, very high profile areas, whether it's New York, New Jersey, California, just different places in California. But just where you're seeing huge demand, especially in states. I would look at regional banks in states that have no income tax. What is it, 6 or something? I think what we saw, right? I'm not going to try to name them. I don't think we could try to name them and mess it up completely. I think it's Florida, Texas, Wyoming, Nevada. I think there's 2 more, but I don't.
Utah?
No, not Utah. I don't think it was Utah. I think it was something on the East Coast, though. It might have been Virginia or something. I don't know. And it was another one.
Tennessee. It's not on the East Coast, but I think it's Tennessee.
Was it Tennessee? I don't know.
Subscribers will
listen. So we mess up sometimes.
Yeah, email us, tell us how terrible we are.
Well, so guys, let me know what you think of this format. I want to really break down the news. There's so much going on. This week was incredible in terms of how many deals, the SPAC announcements. There's just so much news flow. And I love giving you an opinion that we talk about every day. When I walk into the office and Daniel and I just, shoot the shit, talk about all the stories and everything. And I just thought that would be pretty cool to really have this, be taping it, you guys listening to what we're thinking, almost like on a daily basis, because all this stuff happened like in the last 2 days, 3 days. So let me know what you thought of this segment, frankcurzioresearch.com. And Daniel, thank you so much for joining us, bro.
Hey, great to be back. See you soon.